Hi, I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC. Its weekly commentary is the basis for this market update. So let's jump right in and take a look at the market action last week. Last week, the S&P 500 was down 1.2%. The Canadian stock market was down 2%. Now, these drops in value don't tell the whole story because last week was quite a volatile week. We saw some large ups and downs, even on an intraday basis. The big news of the week last week was the non-farm payroll number that came in at 210,000 jobs being created in November versus an expected 550,000 jobs. That's quite a big miss. Investors became quite concerned based upon this miss. Also, too, midweek, we did see Powell present to the Senate Banking Committee, and he mentioned that it was time to retire the term transitory inflation, as inflation has been more persistent than originally thought as well. That also provided some volatility midweek for the stock markets overall. This week coming up, on Friday, we do see the CPI report coming out, expected to be released, showing inflation on a year-over-year basis coming in at 6.7%, which is a very high number. The report last month for the CPI print for October was 6.2%. And investors became very concerned over that as they've seen higher and higher inflation as well. So it's going to be interesting to see how investors react to this number coming out on Friday. Last week, HAC was fairly quiet in its portfolio without any major substantial changes. If we take a look at what was happening last week on a daily action for the S&P 500, here you can see that on Monday, the market actually went up. The S&P 500 went up. On Tuesday, it went down, closed down. And then on Wednesday, it closed down again. Thursday, it did manage to go back up again to close higher on the day. And then on Friday, we saw the stock market once again close lower. Now, we did see some fairly large intraday movements on Wednesday last week, and there's Wednesday, and on Friday as well. We saw the market really move around quite a bit as investors are really trying to figure out what's going on in the markets. If we take a look at what's happening from a yield perspective, we can see here that on Monday, the yield on the 10-year Treasury note in the U.S. actually increased, and on Tuesday it went down. Wednesday, Thursday, it was fairly flat, went up a little bit on Thursday, and then you can see that on Friday, based upon the release of the week non-farm payroll number, you did see the yield on the 10-year Treasury note close lower. It closed last week at 1.35%. If we take a look at what happened on a sector level basis last week, here you can see the S&P 500 at 1.2% negative for the week. The consumer discretionary sector was off last week. Now, the consumer discretionary sector has been doing quite well recently, but last week we saw fairly large drops in the price of Amazon and Tesla. And both those stocks make up approximately 40% of the consumer discretionary sector as represented by the ETF XLY that trades in the States for consumer discretionary. Communication services was weak last week. Technology was negative, but did better than most sectors of the market. Utilities was up positive last week as investors went to more some of the defensive sectors of the market, and also falling yields helped push up the utility sector. Last week, we did see the financial sector actually get hit a little bit as well, based upon largely because of falling yields. So what's on the agenda for this week in the markets? Well, it's fairly quiet from an earnings perspective. Q3 earnings season is largely winding down. So when that happens, you find investors really focusing on reports coming out from the Federal Reserve, plus other economic reports as well. So this week we do see the CPI number coming out on Friday, and it's expected to come in at 6.7% year-over-year growth, and that's quite a high number. Investors are also going to be looking at the same time as the following week. So on December 14th and 15th, the Federal Reserve has its last scheduled meeting of the year. So investors are going to be looking at the CPI number coming out on Friday through the lens of what might happen next week, if whether the Federal Reserve is going to announce an increased pace of its tapering. Currently, right now, the Federal Reserve is tapering its QE purchase program by $15 billion a month. Recently, Powell has said that at the next Federal Reserve meeting, which takes place on the 14th and 15th, that it's expected that they will talk about increasing the rate of the taper based upon the economy growing, and also too as well the inflation rate concerns as well. So investors are really going to be focusing on the CPI number. If we see a CPI number coming in at 6.7% or higher, that could be a little bit of trouble, especially if we get up into the 7% range for inflation. If that did happen, that could actually quite scare the markets quite a bit, because then investors would be more willing to say that the Federal Reserve is probably going to move more to a hawkish stance. So we could see some nervousness in the market. We did see some volatility last week. The VIX did reach above 30 last week as well, and that could continue on this week, especially as we get closer to the end of the week on the CPI number and what could come out of that. On a seasonal basis, December tends to be a strong month of the year, but this time period, the sort of the middle range of December tends to be a little bit softer than either the beginning of the month or the end of the month. Now, a lot of the media towards the end of the month starts talking about the Santa Claus rally taking place, and that's always a possibility seasonally. That it tends to be strong. The stock market tends to be strong towards the end of the month as well. So right now we're in this period where investors are really trying to grapple with what's going on in the market with Omicron variant and saying, well, how severe is it, and what's the impact on the market? And also, too, whether the Federal Reserve is going to become more hawkish or stay on its current path as well. So there are some concerns for investors as we head into this middle of the month for December. It's going to be an interesting week to watch. Thank you very much for joining me today.